I'm not a financial advisor. This is not financial advice. Please do your own research. Welcome to the Vinny G Markets channel, brought to you by Vinny G Money. Let's pick up where we left off on the last market cap video. So what happened during the rest of the week? We hit nothing but new record high, and we ended off the week with a new record high. So that's what's going on in the stock market. Like we said, it's been doing nothing but going higher. Why has it been going higher? Has it been due to the economic recovery? Let's take a look at some of the reports this week that came out. We have a U.S. durable goods order report that edged down for the month of July. Definitely not good. And the first-time claims for U.S. unemployment benefits, this number comes out on a weekly basis. The new number this week was 353,000 more people filed for first-time unemployment benefits. And what the media will do is they'll tell you that these numbers are good because they're not as bad as expected. But these numbers, they definitely are bad. Our economy is doing nothing but shrinking. And I also wanted to pull up in this video GDP to debt ratio. It's currently at a level of 125. That's definitely not good either. We'll pull up a definition of debt to GDP ratio, and that's just our ratio of what we produce versus the amount of money that we're borrowing. We're not really producing anything anymore, but we're borrowing money, which is why our ratio is just astronomical. If you look at the bottom of this definition, you see it says a study by the World Bank found that if the debt to GDP ratio of a country exceeds 77% for an extended period of time, it slows economic growth. And if we pull that chart back up, we've been at 77 since, around 2009, and it's done nothing but grow higher. And you see from 2019 to 2020, it just skyrocketed even over that 120% mark. So I just wanted to show proof that our economy is definitely shrinking. It's not growing, and that's definitely not a good thing for the people. But you know what it is good for, unfortunately? I'm not saying this is right, but it's good for the stock market because, like we said, as our economy gets worse, our stock market just gets better because the more relief our economy is going to need from the Federal Reserve. And again, when we need more relief from the Federal Reserve, they pump out more money. That money finds its way to the stock market, and it does things like reach new record highs, while our economic data is not good at all. But with that said, let's take a look at our indicators, which is going to show us where the market is going. We'll first pull up this U.S. 10-year Treasury. Now, what did the U.S. 10-year Treasury do? We're at currently 1.31%. And what we say about the 10-year Treasury, as long as there's no spike higher, there's no threat of any market crash. So the actual lowering of this 10-year Treasury is what actually boosted the stock market higher. Again, no spike. It was raising a little bit, but it did get knocked back down. Markets liked it, so we reached new record highs. So let's pull up our second indicator, the U.S. dollar index. What happened with the U.S. dollar index this week? It went down. When this goes down, again, the markets love it because it takes more dollars to buy stocks. Stock prices go higher. And who's the cleanup hitter that we need to make the stock market really go higher and reach new record highs? That's right, it's crude oil. And what did crude oil do this week? It did nothing but go higher. Let's pull up some crude oil news this week. Looks like in Mexico City there was some type of fire that struck an offshore oil platform. Also, there seems to be some type of storm approaching the Gulf of Mexico, which is affecting the amount of oil production. I'm not saying any of this is planned, but every time crude oil is under some pressure, things like this happen. Regardless, we look for things like this in the news so we could get a gauge on where we think crude oil is going to go, because that's going to affect the overall market. So when you see things like this happen, we can expect crude oil to go higher. Now, the most important thing that happened this week was there's some type of Jackson Hole summit meeting with the Federal Reserve. And what do we say? We're going to watch the Federal Reserve like a hawk. Now, if you didn't know there was this Jackson Hole meeting going on, or if you know family or friend members that didn't know this meeting was going on, direct them to this channel. This is the important stuff we need to be watching because the Federal Reserve controls everything. What they say at this meeting is very important, and people need to know what the Federal Reserve is saying. So what went on at this meeting? The big thing at this meeting was, is the Federal Reserve going to taper? Jerome Powell, our man, Uncle Jerome, he came in. He said that they would like to taper at the end of this year. He was very vague. No timetable was given. No amounts were given. Not much was really given. They did say there's no way they're anywhere near raising interest rates and the market like that, because like in our prior video, we showed what happens to the stock market when interest rates are raised. So with the lack of direction and just Uncle Jerome reaffirming that they're nowhere near raising interest rates, the markets love that, and that's why you saw big jumps today in the stock market, because without any direct plan of tapering, that brought the US dollar down, it brought the US 10-year Treasury down, and again, we know what happens when both those things go down, or at least stay stable. Along with crude oil going up, the market's just gonna go higher. And I also just wanted to introduce something else we're gonna look at on a market recap basis. It's these things called reverse repos. It's what the Federal Reserve does. The actual definition of it is very hard to understand. Let me pull up a definition of it. Basically says a reverse repo is a short-term agreement to purchase securities in order to sell them back at a slightly higher price. What you really need to know about this is, if you look at that last point, central banks use reverse repos to add money to the money supply via open market operations. And what I've noticed is the U.S. Treasury at one point during March, it was getting very high. It was almost near the 1.7% range. And if you pull up these reverse repos, I'll leave a link below on where you could find them, or you could tune into this channel because we're going to go over it every time I do a market recap video. But in March, when the rates were actually rising, the 10-year Treasury, they were doing reverse repos of about 11 billion. Then you could see in May, by that time it was increasing to about 200 billion a day. Then if we go to July, we see that it was reaching that 800 billion mark. And if we go to present day, you see that we're doing $1 trillion in these reverse repos, and this is on a daily basis it's happening. You could check this every day, but I feel like as long as they're doing these $1 trillion reverse repos, that's going to manipulate these treasury yields down. So if they actually do taper, because again, we can't trust anything the Federal Reserve says, even though they told us they're not going to taper and they're not going to raise interest rates, I wouldn't be surprised if they came out tomorrow and started raising these things. You know why? Because the Federal Reserve, they just can't be trusted. So what are we doing? We're going to the Federal Reserve website. We're checking out these yield rates, because if they do taper, that's going to reflect in the debt market. And these debt markets are measured by that 10-year Treasury. And we're going to start seeing these reverse repos then go down if they actually are tapering. At least that's what I'm getting out of it, and that's what we're going to cover on this channel. So you see, with everything in place, 10-year Treasury stable to slightly down a little bit, US dollar slightly down, crude oil up big time, and the markets up big time, multiple record highs throughout the week. And I just wanted to go over another bit of interesting news. I know there's a lot going on in Afghanistan right now. I'm not going to get into the whole political aspect of everything. I don't even know much about politics. I don't pay attention. I just, follow what the money is doing. So let me pull up this article. Even though Afghanistan now, I guess, has control of their country, if that's what's going on, they do not have access to their money. If you read this article, nearly $10 billion in reserves. Where is it being held? By the Federal Reserve Bank in New York. And if we look at the rest of this article, let's go down. Look at this. About 1.3 billion of the Afghan central bank's reserves are held in international accounts, with some of it in euros, British pounds, while the rest of it is held where? The Bank of International Settlements. And what we go over in the other videos, the Bank of International Settlements, they actually create all the central banks that are placed in all these countries that control the money supply and interest rates, therefore run the country no matter what's going on. So I just thought that article was a little interesting. Also, what people are overlooking in the this whole Afghanistan situation, a lot of people in Afghanistan are starting to adopt Bitcoin because their currency is basically worthless and they can't even get access to their own money. So this Afghanistan situation, it might be an experiment going on to see, is it better to hold Bitcoin and other cryptocurrencies, or is it better to hold the currency of a third world nation? But I have an interesting video, if you want to stick around till the end, about the adoption of Bitcoin going on in Afghanistan. I just thought it was very interesting and just something we need to stay on top of, because these digital currencies are here to stay. So anytime there's some type of adoption going on, we need to pay attention and listen, because this is going to be very important for us going into the future. So thank you for the listen. If you like what you hear, continue to tune in. Hulk smash that like button. And let me leave you off with this, as always. The God of Abraham, the God of the Bible, the Father of Jesus Christ, our Lord and Savior, is for real, and may He bless you.
So the last week has laid bare the worst case scenario for a country that's running on legacy financial rails. You've got a nationwide cash shortage, closed borders, a local currency that's been touching record lows, and not to mention rapidly rising prices of basic goods. And that's why some Afghans I spoke to are turning to cryptocurrencies like Bitcoin, Ethereum, and Litecoin. Some people leaving the country are using their crypto wallets as a way to bring their money with them. Others see crypto as a way to stay put. I spoke with Farhan Hotak, who lives in a rural part of the country, a village called Zabul, and up until this last week, one way that he would make money was by day trading altcoins like Doge. I spoke to another person, Musa Ramin, who says that he can make more money in crypto in a month than in construction in a year. They also say it's a safer store of value than the local Afghani currency. One thing to keep in mind, though, unlike the rest of the crypto sphere, a lot of Afghans dealing in Bitcoin aren't talking about it. But the data shows that widespread adoption of crypto is definitely catching on. Chainalysis put out its annual Global Crypto Adoption Index in the last few days, and it gave Afghanistan a rank of 20 out of the 154 countries it evaluated in terms of overall crypto adoption. And when you isolate for its peer-to-peer exchange trade volume, Afghanistan jumps up to 7th place. Last year, Afghanistan's crypto presence was considered so minimal as to entirely exclude it from the 2020 ranking. Now, while the data is promising, major barriers to mass adoption remain. Beyond the fact that there is limited access to the internet and frequent power outages, a vast majority of the country is unbanked, meaning that they don't have access to the global economy from inside of Afghanistan. So the on and off ramps to the crypto world from Afghanistan are anything but straightforward.
Okay, here are some numbers